A partnership is a legal relationship between two or more people who share ownership of a business. Let us look at how it works. At its core, a partnership is simply a shared venture where owners combine resources, skills, and capital to operate for profit. Unlike a sole proprietorship, which has one owner, a partnership brings together multiple parties to share the load and the upside. Partnerships are known for pass-through taxation, meaning the business itself does not pay income tax. Instead, profits flow directly to the partners. Not all partners have the same role. A general partner manages the daily operations, while a limited partner acts mostly as an investor. General partners face higher risk because they are personally liable for the business, whereas limited partners are generally protected by their initial investment amount. Always document your roles, profit splits, and exit strategies. A clear agreement helps prevent disputes before they even start. Partnerships offer flexibility, but require trust and clear legal structure. Consult with a professional to see if this model fits your goals.